The 18th National Congress of the Communist Party of China concludes today, which will introduce a new slate of leaders. Yet how the new Chinese leadership navigates its economic challenges could play a key part in the global recovery. Joining me now to discuss the Chinese leadership transition and needed reforms going forward is Jianguang Shen, Chief Economist at Mizuho Securities Asia Ltd in Hong Kong. Now, Jianguang, while the final lineup of the new generation of Chinese leaders is yet to be revealed, how well do you think China's new leaders will confront and address the central challenges that face the world's second largest economy?
Well, I think for the new leadership, it's very clear that China needs to have a new model for economic growth. And that means that they need to move from the export and investment-driven economy to a more consumption-driven economy. So that, I think, need to be achieved, to change the whole growth model and to make people's income to rise to accommodate this increasingly high demand for consumption. So I think they need to do a lot to also increase the social welfare system. So I probably see it's a very, very big challenge to move from an old model to a new model.
You mentioned some of your views there. Perhaps you could elaborate. What are your views on future reforms, policies and the growth model for China? Also, do you think that the point where we're at now with China will require the new leaders to take more ambitious steps? Or should market participants not be expecting such radical reforms in China?
I think that the Chinese investors are really hopeful that the more dramatic measures can be taken to do the restructuring. But I believe, looking from this announcement so far, I think the change will be gradual, especially regarding the political reforms. I think probably more folks will be on the economic front, especially if that something is easy to be done.
Now, some analysts feel that now the new leadership has been ushered in, that they will need to do more to encourage bank lending and also address the risks of bad debt in the banking system. Do you agree with these analysts?
No, I don't agree. I have the totally opposite view. If they are just, try to encourage more bank lending, it's just like the old model. So I think just like the bank lending to encourage investment, that has been that was done during the 08-09 financial crisis time. And now the Chinese policymakers, especially the new leadership, realize that only after 2 to 3 years after this bank lending-driven investment and the growth, and then they have an overcapacity problem, very wide and spread overcapacity problem. That's also the reason why the economy is slowing down now. So if they again, encourage more bank lending, encourage more investment, so that's not what I mean by the structural change. That means the old model, which the new Chinese leaders believe is not going to work.
What about this growing inequity of income in China? How can China now steer away from this so-called middle income trap?
Yeah, that I think is one of the challenges I mentioned. It's because the old models, it's investment driven. So, and SOE, state-owned companies, and the monopoly sectors, that they are gaining the most. And all these resources has already moved to this state-owned monopoly sector. And that's also the reason behind the rising inequality of income in China. So that's why the new model, if they want to really solve the problem that consumption is not sufficient to boost the economy, then they need to not only to boost the wage, but also to solve the problem of income inequality by allowing private capital, private companies to compete with the state-owned monopoly companies, so that the new sectors can gain and workers from this sector also can gain.
Okay, interesting. But in terms of rebalancing the economy, especially away from its dependence on exports, do you think though that China will change before a crisis forces it to?
Now, to this, I am more hopeful. I believe that the U.S. financial crisis, the subprime crisis from 08, and also the current European euro crisis, and also the weak growth in advanced economies, OECD economies, has already forced China to move away from export-led growth model. So actually, over years, I already see that the Chinese trade surplus declined from around 7-8% of GDP, now only to around 2% of GDP. And also, I'm seeing the export growth has declined from 20 to 30% annual growth, now to below 10% growth. So that's, I think, if there's no choice, and these things has been happening much faster than we expected. So that's why, I think that the new leadership are very aware of the fact that in the future they cannot rely on exports, and also they can rely less on investment. So that's why all the effort has been to boost consumption and the service sector in China.
Taking into account current leading indicators, what are they saying about the state of the economy right now then?
I think all the leading indicators are actually indicated that the Chinese economy has already stabilized at a low level. There's slight rebound, but I believe that this recovery will be quite mild. I think this is actually also a policy target from the new leadership, so that with low stable growth, that they can push for very much needed structural reforms to make the growth in future more sustainable.
Well, thank you very much for joining us. Jianguang Shen from Mizuho Securities Asia. Now, we'll have more on China's leadership transition later on in the week, but in the meantime, do stay tuned to DukascopyTV. So viewers, goodbye for now.